Ladies and gentlemen, welcome back to the channel. We're in there, baby. Let's go. Time to get crunk. Let's get crunk, baby. First green futures in a while. Think we could use a little breather. Use a little breather in the markets. It's a bit choppy. It's a bit choppy lately. Ooh, how are we doing? How are we feeling out there? Are we feeling good? Are we feeling good? Let's go, baby. It's that time again. Trayvon, Michael, what's going on? TMIs, let's go, baby. Oh, let's go. It's like, if you're not in sports, tomorrow is the damn Super Bowl of this year so far. Let's go. It's game time. Game time. Look at that. Futures looking good on the NASDAQ side, but weak overall still. I know we've been getting beaten up. Just straight beaten up. Vlog, there we go, baby. There we go. In the house. In the house. Yeah, I do want to talk about Microsoft earnings too really quick with you guys. And I do want to show you cabin, I don't know what to call you, vlog. I'll call you vlog. How to exactly day trade. It's essentially day trading with an account less than 25,000. Sunday was, yeah. Microsoft earnings were actually really good, and they guided to the positive. Like, said really good things for 2022. Ow. Says Microsoft surpassed estimates on the top and bottom lines, but Azure cloud revenue merely matched analysts' expectations. The company's gaming business is in the spotlight after Microsoft said it would acquire Call of Duty publisher Activision Blizzard for $68.7 billion. You can go through all of it, but overall it was good. The company had $36.77 billion in unearned revenue at the end of the year, below the street account consensus of $36.9 billion. Microsoft said it expects to recognize 45% of its $152 billion in remaining performance obligations over the next year, the time that percentage has slipped below 50% since at least 2017. So both some positives right there. It says Hood said the company expects revenue of $48.5 billion to $49.3 billion in the fiscal third quarter, topping the $48.23 billion Renoviv consensus. So they're definitely guiding to the positive, and I still think that they're not. I don't think even companies fully realize, or at least they don't want to lead on, that 2022 is not going to be a huge spending year. Microsoft is in a better situation, though, because their cloud category is obviously their highest growing sector. So that will be good for them. We ride at dawn, baby, and it's actually going to be green. Julie Miller in the house. Let's go. Let's go. Can you explain what would happen if SEC halts trading? Yeah, it's just like a volatility halt. I mean, they can halt it for a couple days or like a month if they wanted to, but I don't see that unless there was like claims of manipulation or something along those lines. I mean, what company do you know of that had the SEC halt them if it wasn't a penny stock or a low market cap pharmaceutical company? I can't think of one off the top of my head. But like trading halts, I'm sure you've been through those, so I don't think you're talking about those, and that would just be business as usual. That first, damn. Yeah, people were quick today. You guys were ready, seeing the futures. You're like, hell yeah, we're jumping in here. Let's go, baby. But yeah, Microsoft, as far as really the the highlights people are paying attention to, they're obviously excited about the guidance, but this is the first quarter in a long time, or first year in a long time. They haven't grown as much as the last one. The last one was 22%, or the last quarter was 22%, and this last one was 20%. So people want to nitpick, but I just think it's the time of the markets we are in right now, that it doesn't even matter, good earnings or not. It's a buy the rumor, sell the news, or could be sell the news, buy the rumor type situations too. It all comes down to the Fed, though. That's the whole situation. And if you see this is a cool tool that I like to use. Investing.com/central banks Fed rate monitor, or just investing.com Fed rate monitor, and you can see this is telling you basically what people are pricing in. So for the January 26th meeting that's going to be tomorrow, there's a 3.7% chance that the Fed raises rates tomorrow. So I don't think they will, but it kind of would make sense right now, given the fact inflation is so high. If they really wanted to crush inflation, like immediately, make sure they are not behind the curve, then they would probably do that. If that did happen, expect a big sell-off. If it doesn't, if the Fed's dovish, then it should be good. But I mean, there's always that chance. I mean, Fed Jerome Powell's been straightforward with the markets, and he hasn't rug pulled us too much yet. Once, kind of, but it'll be interesting. Shout out from Ontario, Canada. There we go. Anyone see Jim Cramer's rant on random investors and AMC GME? He should have to wear an ape suit after the MOS. Oh yeah. I actually want to show that in a video. Jim Cramer's just something else. Especially today, it was a little bit more excessive than the usual. I mean, he did talk a little bit better about AMC compared to GameStop. But I mean, just bashed investors of both companies and the companies itself. And then there's another video on CNBC about them refinancing their debt that came out around the same time, maybe a little bit after. And they were saying, yeah, this is great for AMC, like this will be a positive thing. It's just, he's always got something to say. Don't we want to crash? Yeah, I mean, but I think, me personally, like, you don't see the markets just go straight down. So what I personally want to see for a crash is something like this, right? The March crash. You go down a lot like we just seen. You bounce back up a little bit, but you're not getting that full on buy the dip momentum all the way back up, or even close to the top. I don't think that's what it's going to be. I think if we do see a bounce tomorrow, if the Fed is basically kicks the can down the road to March, you have a lot of time in between this meeting and the March meeting, and that's where we're going to head back down. I mean, because we're at 434, so we're still at the bottom end range, and it's like, over the past couple of days, we have moved a lot each day, but we really haven't moved around all too much. Like, we're pretty much at the same rough location that we have been at for a while now. But yeah, I think there's a lot of time to see a crash. Fed Jerome Powell might start the crash, or he might, not start the crash. He might postpone it a little bit, but I think either way it goes, people are just going to be more fearful because you're seeing valuations compressing. What's up, Big Blue CNC? Edward Morgan in the house. Shout out to the mods, baby. We ride together. We die together. Bad boys for life. There we go. Oh, I love the attitude. Got the water, because, apes drink a lot of water. You know what I'm saying? I need a little bit more of that. But yeah, I want to teach you guys something too. So let's see. What are we looking at? What are futures doing, baby? Yeah, but Fed Jerome Powell comes out at the report will come out at 2. So 2 p.m. Eastern time, you will see a sharp reaction in the markets, up or down a lot. So just by then, if you got any trades going on, just be wary of that. You're going to see a big move. And then at 2:30 is when Fed Jerome Powell starts to speak. And that's when you're going to see the move in either direction, up or down, really start to accelerate and choose a direction. When the reports come out at 2 p.m. every single time, there's a big move to the upside or the downside, usually to the upside. And then once Jerome Powell starts to speak, it just goes straight down. But if there's a surprise, it honestly could go either way. But just don't get fooled by that. Don't think because the 2 o'clock sharp drop, we could drop 1% or 2% really fast. That's not the final move, and that doesn't dictate what's going to actually happen. So I do now want to go through something. Let me see, because Vlog, you still in here, brother? Vlog is a supporter, baby. Very active in the community with the buy and sell alerts. So I want to show him, and I want to show you guys how you can day trade essentially as much as you want with an account less than 25,000. I mean, some of y'all are ballers. Don't get me wrong. I mean, some of y'all like I got 5 million shares. No, you're like, I got 200,000 shares. Okay. You probably don't need to learn this then. Yeah, that's some shady shit with Microsoft dumping earnings, and they bought it back up probably to keep futures flat. Yeah, there was definitely something weird going on there. It's I mean, when the actual numbers come out, it's trading algorithms. So I think they're just programmed right now. Once earnings come out, sell the stock, and then, like you said, just buy the stock again. So it's yeah, it's some real shady shit. Especially right now, I mean. And then it's like Microsoft made the whole move, like down, back up, and it's pretty much in the same place it was for most of the day. So, I mean, people on both sides lost. Unless you're the market makers that take the back ends, then you won. If both people lost, then the market makers won. 600 now, so I'm addicted to keep buying. There we go, baby. There we go. What are your thoughts on the hedge funds cover in after hours? Will it have a negative effect? Well, if hedge funds covered in after hours, you would see it. I mean, unless they did it in the dark pools or something. Because if you pull this up to like the 15-minute, you could see that the volume's really, really, really low. Like there's not much activity in the after hours, unless it's like the first 15 minutes. After that, it drops off. So if they were covering, then you would see it. You definitely see it. Same thing with shorting too. I mean, that happens a lot. My opinion though, I think a lot of the shorting or potential covering happens like early morning, like 4 to 5 a.m. That's when you'd be able to do that, and it would move the stock. Not as many people would see it, and then by the time people start to actually trade pre-market more aggressively, it would kind of wash itself out. But I don't generally think that happens too often. You think when Mark crashes, when we moon? Oh, then we moon. Yeah. But we need some kind of catalyst. So, if AMC does refinance their debt, I mean, if they're at around 11% interest for some of their highest interest debt, if they could get that even at like 4%, 4.5%, 5%, I think there's a good chance the stock could rally off of that. And if we're in the I mean, if Powell crashed the markets and that comes out, say, next week, because AMC said they're in advanced talks, then, I mean, that would not surprise me. I wouldn't bank off of just that catalyst alone. But, yeah. Essentially, yeah. Need the markets to crash, but you need some catalyst. Which, in our case, the meme stocks move each other. So it's like we don't need just AMC to have a catalyst. We need some, any company really to have a catalyst. And then it'll set off a new pattern, right? So the markets, they go in and out of favor in different things. Like meme stocks are one, penny stocks, value dividends, it's pretty much the same thing most of the time. Growth stocks, there's different sectors, and when they go, they go. When they hurt, they all hurt. So, it's that sector rotation might actually start at the bottom once a catalyst does come out, which would be initiated by shorts covering, though. Microsoft at 5% of the SPY. That would gap down SPY in the morning. Oh, yeah. And then right after tomorrow, we have Apple earnings. So, woo. And honestly, I would much rather own Microsoft right now than Apple. Just because I feel like, I'm not an expert on Apple, but I think Microsoft is a little bit more diversified with their cloud, with other things they're doing. Apple does, they do well, obviously, but bigger they are, harder they fall, baby. Yeah, Apple's 12% of the weighting. So, almost 12%. It's like 11.85%. If that goes, Microsoft goes. I mean, Amazon's been falling. If they all go, oh yeah. Because we're really in like a deep bear market. Beyond the surface of the large cap stocks, the mega cap stocks, you're in a deep bear market. Like, not even if you're just an AMC. Like, I'm not even just an AMC, and my portfolio is down substantially. And I'm in high quality companies of the future. Like I'm not even in like your nano dimensions or like really speculative, like who knows if it's going to actually work long term, how big it's going to be. I'm in a lot of good companies like PayPal and Square and, companies like that. DraftKings people use, and they're all down like 60%. Puts printing. Put on SPY. Okay. We're buying the puts. I really hope this goes up. So many plays that I love are so low. I messed up putting all my money. The play won't do that again. All right, that's throwing me off. We got Big Blue CNC and we got Big Blue. Do y'all do this on purpose? Y'all are tripping me out. Let's get the party started now that we have the hottest people in the house, baby. Woo! Simon says Moas soon. There we go. Simon says, baby. Fed's going to finish taper tomorrow, which is going to smash Apple to shreds on Thursday, leading to a meme stock rally from Wednesday to Friday. Yeah, that's kind of what I'm thinking, too, is that they're going to announce they're done with the taper. Yeah, 100%. We're on the same lines here. But I mean, if they really wanted to like crush inflation, then they would raise interest rates 0.25% or 0.5%, which I think that's unlikely because that's a huge rug pull. But did you watch Boss Blunts today? He's predicting a market crash starting Thursday. And then the MOS. What's your opinion? I mean, not exactly. I mean, I think the market crash has already started. It's already started. I do think Powell will send us lower, and if we fall under this level, this 420 level is very important. I think I had it marked, but I think I like dragged it off the screen or something. But this level that we did hit and retraced right back up and went positive on the day, this is that big day, down almost 5% on the NASDAQ and went positive. So if Powell's really bad, we're coming back down to the 420s tomorrow. like if it's really, really bad. And then at that point, it's, I mean, we don't have any levels under that. It could be a free fall for a while. Hey, would AMC hit a single digit? Oh, I think that's very unlikely. I mean, because I say this a lot, but it's like the stock's already down 60%. Like, it's already seen most of the losses. You know, that's like even other stocks too that are down like 60%. I'm not a fan of shorting those stocks right now. I think the biggest opportunity is shorting actually, you know, the large cap stocks or the indexes to be a little bit more on the safe side. Because, I mean, you know, it's one of those things where a lot of the market is already just crushed. The only things that aren't are like your Microsoft that's still up over 20% in the past year. Apple that's still up like 18%, or last time I checked. Maybe it's lower now. There's more pain to go. Oh, yeah, there is. Oh, yeah. Anyone else in weekly BBIG calls with me? I'm actually so excited for tomorrow. No, I'm not. I'm not. I mean, I probably should have the first time I heard BBIG, but I mean, I'm surprised that thing was actually making moves this whole time. Really surprised. It's like a conspiracy theory. What sounds like a conspiracy theory? No, seriously. What sounds like a conspiracy theory? Lost me there. Retail have owned 100% of AMC stock since last year. Oh, yeah. I mean, as many people, obviously some people have sold, but I think more people have been buying than people have been selling this whole time. Without shorts, what do you think the actual value of AMC is? 20-ish? Yeah. Yeah, I've said for a while I think the fundamental value is you know, in the 20s. I said 20 to 30. It just depends on what they plan to do, like how fast they start to roll out their popcorn business, which is a cash cow. It's hard to find a business that's 80 to 90% bottom line profits. And depending on what they do to grow the business, then yeah, definitely in the 20s range. If Apple goes to shit, we are going to the bottom. Oh, yeah. And that's what people don't realize is the markets are really, really choppy. Even analysts don't fully realize how weak the markets are. Why is Evergrande's stock going up? Because China, have time to talk about our Lord and Savior, Powell. I love Powell. I mean, Powell, I got to give Powell credit where it's due. He's stuck the course. You know, he's rug pulled us kind of one time. The last meeting when he had the confirmation in front of Congress. But other than that, I mean, he's said very clearly that he was going to let us know before there is a major change. So if he rug pulls us tomorrow, I might have a different stance. I'll probably be very happy because I got some puts too. So, yeah. Powell, young Powell. Oh, we share the last. Okay. There we go. Don't just hold. Buy, hold, and buy more. There we go. Yeah. We gotta keep buying. We gotta keep buying our stock. I mean, like, we're almost down to the level we pretty much are at that level that we did gap up from last time around. Pretty much, yeah. We're pretty much under that. Around 15 is really when we started to make big moves. Plunge protection team to save the market. The past few days. Something's going on. Markets are just they're confused. But I think that's the best way to put it. Charlie Vision upload this very interesting train of thought about the ways of our economy and history to the 1987 crash. No, I have not seen his video, but yeah, like I mean, the waves of the economy, economics come down to the same factors. Sometimes they play out a little bit different from event to event, but like it's very simple. Like inflation always comes from policy error, whether it's fiscal or monetary. It doesn't come from anything else, right? So there's a lot of different patterns in that sense. But yeah, no, I might have to check it out. Microsoft recovered. Yeah, it did. Just 180. It says they're in a strong position to face unlikely market events. Kramer talking about AMC and GME. That sounds a repeating pattern here. Yeah, that's what I was thinking. Well, I think, too, they're just very desperate to keep people at this point. I think so many people have left that, I'm sure we watched the same video that the one guy was saying, I don't know what his name is. He's always on CNBC. But he was saying that, basically pointing out the obvious, that Robinhood was struggling in a low, when retail investors flocked to the app and they were struggling to keep their revenues increasing. They were decreasing the whole time. So now that people are actually leaving, in my opinion, they've been leaving, and you see more people leaving than joining. And then mixed with like interest rates going up and all of that stuff, I think they're just trying to keep people at this point. Cause imagine Robinhood. They're like, dude, if we could go back, Robinhood would have done whatever they had to keep trading open. 100%. They would have took out credit lines. They would have done whatever the hell they had to do. Because they could have. They didn't know how high it would go. If GameStop would have went to 5,000, let's say, then they would have been screwed. But going back now, they would have took that risk. Oh yeah, Robinhood will fail or fall, but no, they will ultimately fail. It might take a while, but Robinhood is going to fail. As long as retail movement is here, yeah. Because, they make their money from people trading. I personally wouldn't go long on Robinhood. Yeah, but I do want to show you guys how to make virtually unlimited day trades with options too. Just so you guys are aware of this. In case your accounts are less than 25,000. Yeah, everyone would love Robinhood. For real. If they had just not done that, their business would be in a much better spot. So they have all lost a lot of money. Like Vlad, all of those guys with a lot of stock. I'm not sure exactly what they own, but they have lost a lot of money. A lot of money. That is probably not coming back for indefinitely, or for the very least a long ass time. And Pantheon say about the squeeze, if it gets out of control and end up on DC door, they will deny all synthetic shares. No, I think people just speculate a lot like that. It would be they would have to find the shares, because it's a little bit different with AMC, but people have their own selling prices. Some people want to sell at 100 or 200 or 2,000 or 10,000. Some people want to sell it at a million. So if there is, say, 5 times as many shares in our brokerages, in our accounts, than actually exist, then they're going to have a really bad situation. It's going to make the price go very high because they're going to have to start paying high amounts to get these shares from people that ultimately don't want to sell like normal people would when the stock goes up 20, 30, 40, 50%. And then I'm trying to articulate this the best way. But essentially, think about it like people are holding and there's hardly any stock, right? People are not really selling, but they will start to sell. And then, the shares will be allocated back to people once the price goes up and some people start to sell. It's really complicated to try to explain in just, a hot second. But long story short, no. I mean, they would, it would just make the price go up. I mean, so basic supply and demand, when it comes down to it. But as far as like you not getting paid, you have a right. You paid money for your shares, so they will have to get them to you. I bought $1 and $2. $1 put 2 years out. Yeah, that's funny. SEC and how the stopping of security is unprecedented. Julie, yeah. I mean, I would say just learn. It does take a long, you'll never stop learning. Like, I've been trading them since I started investing, and I mean, there's a lot you can learn. There's so many different strategies and all of that. Like straddles and strangles right now, really, really good, where you can play both sides and play the volatility. Like, certain strategies like that can do you really good. But yeah, talk about seeing how stopping of security is unprecedented. Yeah, it just doesn't happen. Like, trading halts, volatility halts, pending news halts, those things happen all the time, every single day in the markets. But for a stock to actually be halted for like multiple days, even like a 30-day halt, does not, I mean, it really doesn't happen. At least on the big exchanges, it just doesn't happen. I mean, and when it does, it only really happens to penny stocks when there's some form of like manipulation or false statements going on. Like, even if there's insider trading happening, like, those allegations will come out, but a lot of the time, from my experience, they don't even halt the stock. Well, like, halt it for like a month or something. It just doesn't happen too often. Problem is they've been playing this game longer than us. That's definitely true. Yeah, decide how it will follow. Yeah, it's time. Learn. I mean, you can get into the thetas and actual numbers for time decay, but the more you trade options, you don't even have to look at theta to know like a contract that expires tomorrow that's 5% out the money. Like, you have to see a move like the next day at open, or you're going to lose all your money. Or like a contract that's February 18th will hold up a lot better than these two, and just depending how far out, if you buy the February 22nd on like Microsoft that are, oh geez, there's not that many yet. Okay. Yeah, if you buy like February 18th, let's say, that are like the $500 calls, like they're super cheap for a reason. The premium is kind of telling you a story. But when you're heading into big events like Powell tomorrow, the prices can remain high. So people are just betting on moves in one direction or the other. And if it doesn't move in that direction enough, like Microsoft, like if you bought calls or puts with like the January 28th expiration, if you went far out the money, like all of these are going to be destroyed. Like they're done. They're going to zero tomorrow. All of these. So you could have spent, $200 on this, and I think I actually do have this one to play this side. It's likely going to zero unless we see a big bounce in the markets, and then you have to be really, really careful. Like me, if we do see this, it's perfect because I bought a Microsoft, bought a Microsoft 1250 call for tomorrow, for like 200, and I forget what the price is. But that was just playing a positive earnings. I figured, hey, Microsoft might have a positive earnings tomorrow, but I think in the within the next couple of weeks, it's going back down to the 250 range. So what I did is I bought this one, the $312.50 call, one of them for that tomorrow. So hopefully that does run close to the money. Then that should be good. But and then I did buy the puts, and then I bought the 250 puts on this side to play a longer-term downtrend. And those obviously did pretty well throughout the day too. So learn time, honestly. That's the biggest thing. People try to trade options without actually knowing what time value does. That's where you can start gambling. Yeah, you lose your money in cheap options. Yeah, cheap options, though, like when they're priced really low is when you get those crazy gains. Like to get a couple 1,000% gain. Like I had Redfin $60 calls back when Redfin did its thing and went to like 70 or 80. I bought them for $15. I sold out at $2,500 for one, and I sold the other one almost $3,000. So, those cheap ones can be really good, but you're going to lose way more than you're going to win. So it's about keeping them small. Like $30 could easily turn into 6,000, maybe once a year if you're lucky, maybe once every 2 years. But you just want to pick and choose your battles a lot better with those ones. Sometimes the best strategy is not doing too much at all. But about the how to make essentially unlimited day trades. So I like to do this really with leaps if you're in a good market. Like once we actually do start to bounce, once we get clarity from Fed Jerome Powell, and once the markets accept that, and it's going to be a long time. But, even just to go a couple months out is definitely better to do this to the upside or the downside, really. But you could say, hey, we'll just do this on Microsoft, and I'll show you on the call side. So say you bought, don't buy this, not saying to buy this, but if you bought, let's say this $350 call for $65, right? So to not overcomplicate this, you bought this for $65. Once this one that is further out the money or that is cheaper on the option chain goes to at least $65, then you can sell this one. And since you own this one, it turns it into a debit spread. And the good thing about this is that it's not considered a day trade. You get your money back, and there is no risk left on the trade as long as you collected $65. But, the best part about it, if you can catch a big swing, whether it's in a day or a couple days, I guess it wouldn't matter in that sense because it wouldn't be a day trade anyways. But if you catch a big move, say Microsoft rips up 10% tomorrow, you catch this in the morning, but you don't have a day trade, you buy this for 65, but this 355 goes to 300 and you don't have a day trade, then you could sell that. You could collect your profits, so it's a risk-free trade. The only downside is if Microsoft went to 1,000, all your gain would be is $500, the difference between the strikes. But this is a vital strategy for trading an account less than 25,000. If you're active and you're looking for like news trades and trades that move big, it's essential. I'm not clued up on how to take profits. Yeah. L earnings invest 1,000 at call, 1,000 at a put. One will turn to 0, and the other will turn to 5,000. You win. Essentially, the only way you lose on that is if it doesn't do much at all. Like if it does what Microsoft did, and you have not a lot of time, and it doesn't have a follow through move. But I think I think Microsoft and Apple, I think the large caps are gonna move big. Yeah. Yeah, so you can do it as fast as you want. It's a beautiful strategy. It's actually called legging into a vertical spread, but some people call it different terms. It's vital. It's so overpowered if you're a gamer. It's my number one strategy with an account less than 25,000, but hands down by far. Because you get your money back, no risk left on the trade, and then you still have a max profit too. So it's not like you're limited to your potential. I mean, you are, but you still have a credit open. So you would still have $15 in this trade. You could exit out tomorrow if it stayed at these prices, or if it went up, say Microsoft does go to 330 tomorrow, and this is close to going into the money. If you're like, hey, I think it might go down, you could exit out of it. But in the meantime, this spread between the $500 difference, your potential gain, will go up. So people will start to imply that Microsoft will go over $350. So this might go from $15 potential profit, or, if you were to close it out today, to, tomorrow or whenever the price of the stock went over close to 350, then it might turn into 250 because there's a higher potential it could go over 350, or investors price that in. So it is really good. Yeah, legging into a vertical spread. Hmm. 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 Yeah, futures are looking good, but Asia's looking good too, which is solid. And that's usually what we see, is not a huge green day, but we usually see a somewhat green day before Powell, from my memory off the top of my hand. Great market's just great. So buy 50 out of the money calls and cross your fingers. Basically, I smoked too much in my 20s and my brain don't work right. Well, doesn't seem like I'm the only woman in here. Woman roll call, please. Females. Calling all females. We usually got a couple. Usually. Yeah, it's such a weird spot we're at right now. Danger zone. Now, if we do go to war with, well, not us, but if Russia invades Ukraine, some analysts are calling for another 10% drop on top of Powell. And, Powell doesn't care about saving the markets until the markets are down 30%, like we've seen back here in 2018, 2019. This is when Powell finally stepped in at the bottom, so it's like he will let the markets drop. And this is possibly what happens too. This is probably what happens in 2022. Probably head down. It's choppy back and forth. We move a lot, but we don't move for, let's say, October 10th, we hit the bottom. For 2 months, it was a lot of moves every day, but we didn't move anywhere. It was just up and down, up and down. So a lot of trades will get clapped in that time. And then finally make that big move down, because it's all going to come down to the Fed. What they say tomorrow is going to be very important, but I think there's going to be a lot of instability, volatility, and negativity in the markets until the rate hikes are done. And I think they're not going to take years to raise rates. I think the economy is going to slow down compared to what we're used to, and then ultimately they're going to have to put the brakes on it because spending is slowing down. Puts on the S&P 500 in April, well priced. Oh, we do got some females in here, baby. Dan the man, let's go. Let's go. See, there's a couple in here. It's not all a sausage fest. We love our females. But you said the SPY, right? The SPY, baby. Okay. What'd you say? What'd you say? Ooh, what you say? Ooh, honey, honey, well. Okay. Puts. I mean. Oh, jeez. I mean, the spreads are. No, yeah, they're not crazy. 375. I mean, 375, your break even. It's going to be like 69 roughly. So I mean, it's not terrible. You do need a big move down though, but they will hold up their value a lot more, so that's the good thing about going further out. You don't want to go out to like these, like a 220. You're gonna have to see a move like down to 300 on the SPY to I mean, they would go up, but you'll have to see that move fast. Like, if it doesn't happen fast, you're going to see Theta just kill him. If I were personally to do this, I would go, I mean, you're going to spend a lot, but your break even is going to be beautiful. Like, your break even on a $400 put for April, if you spend $1,021, sounds like a lot, but your break even would be about $390 on the SPY. That's, I mean, I don't want to say you're going to make money on that, but your odds of making money are really, really good. Like, really good. It actually does not look like a bad trade. And then, for every $10 under 390, you're going to make $1,000. So if the SPY does go to 350, you're going to make $4,000 off that contract, which is I do have my thing set. So I think 400's really like your level will probably chill out at, and then 365 is probably the lowest I would think it would go. But even if the SPY did fall to 400, that contract's going to go up in value. Like, you're still going to be up over 100%. Because people forget, it's not about the quantity of contracts or what price necessarily they are. It's about the percentage they go up. So yeah, that's why like a lot of like hedge funds and stuff, they if they buy puts or calls, they buy them usually in the money or deep in the money because you pay less premium. People that buy the out of the money are really just full-on speculators and a lot of retail. That's why the market makers, they take the AMC out of the money calls all day long. All day long. Hedge funds don't buy those. No way in hell. No way in hell. Their colleagues would laugh at them. So, I mean, like, your break even on that, like I said, 390, you're paying 1,000. Let's see, what's your break even on like a 325? 325. 25 minus. Hold on. I'll just bust out the calculator real quick. Real quick. Er, 25 minus 1745. So your break even is going to be about $7 lower. So your break even's like less than 1.5% down on the SPY. But you're still paying $1,700 for it. Which these honestly look very attractive. So yeah, to answer that question in the longest form possible, I definitely did that. Then they do look really good for April. If you do go close to the money, like 400 and up looks good, but you're spending $1,000 for any of these. I wouldn't go any lower, honestly, unless it's like a day trade. Then I mean, there's that. That's a whole different situation. Yeah. We could come down a lot, though. Yeah, futures are looking good. And this is exactly what I want. Like, that's why I set up the Microsoft trade like I did, because I was hoping to see a green day, at least the start of the day, so I can get out of that Microsoft contract and play the downside after the Fed meeting, which, I mean, there's a chance that, yeah, Christopher Bate, that was for April. There is a decent chance, though, if the Fed is, I mean, I personally think that there's no way the markets are not going to sell off. I guess I'll see if I'm completely wrong or not, just because that's the mood of the markets. They know rate hikes are coming. They know growth is slowing down. Revalue these companies. That's just what algorithms are trained to do. So they're instinctively selling things right now off good and bad news. But yet he could, like, if Fed Jerome Powell comes out and says, yeah, we're seeing growth slowing down a little bit, we're going to hold off tapering and raising rates for now. The markets are going to have a 4 or 5% positive day across all indexes. That's going to be green light, all in. Margin city again. If that don't happen, which I think is like less than 3%, and no. Fed news before Tesla earnings, so will it be determined by Fed or Tesla? Oh, Fed is king in the markets. Nobody even, like, your big drops in the markets are almost always due to the Fed, besides the crash of 2020. And the Fed saved the markets. If Fed Jerome Powell did not step in the way he did, the markets would still be like up here, like right here with like cruise lines, right? Be like almost at their highs before the pandemic, but not quite. The markets would still be down here without the Fed. But yeah, almost all crashes and situations are products of the Fed changing policies. And it's always due to inflation or prices going crazy. I mean, the 99 tech bubble, that was a different fucking story. Look at that. Woo! 42 on the SPY. 157. See, that's crazy to think, though. Like, 42 on the SPY back here in 1993. And the low in 2009 was 67. Fucking, what? 93 to 2009? That's like 20-ish. That's like 20 years. That's over 20 years. That's like 25 years, ain't it? Yeah, that's crazy. I'd be tripping. Yeah, it's going to be real good, though. Real good. What you want to see, though, is the Dow and the S&P up as much as the NASDAQ. Because the NASDAQ can flip so fast. It takes a lot more to see, like, the Dow and the S&P flip. change directions. NASDAQ can do that in two. I mean, we seen that in a half an hour. The NASDAQ had recovered and then lost it all. It's crazy. Like, what? Like, ruthless. Just fucking ruthless. Like, what? Sold off, chilling, sold off, went right back up 1.5%, straight back down. Kind of crazy. This is not a normal market. But tomorrow is the big day. Tomorrow is the big day. But Tesla earnings are going to be wild. I mean, if it's anything like Microsoft, if they are not like top notch, like top tier, the stock's going to sell off. Unless Tesla's in after hours, though, I believe. So, I mean, it could be doomed either way, depending what the Fed does. Yeah. Ooh. Know nothing about how to deal with options contract. I want some for April on SP. I'm going to have to do some reading up on it. We have a paid trading community. I send out my trades, people send out their trades, and we talk, and that's where I can like go through things with you one-on-one. That or here on the live stream. It's like $20 a month. If you want to sign up for that, that's the only Discord that we use. And then I do have a Twitter. I don't believe it's linked in this live, but it's linked in the pinned comment of the last video. Do you follow the 1348 crossover? I mean, not really. I mean, I like to use VWAP because there's really two different ways that I like to trade, right? I think technicals, like if you're trading off of technicals in this market, which I do, right, on a daily basis. So if I'm looking at the SPY, and I've had this level marked for quite a while now, since the other day, like these key levels, like I'll just watch the key levels. These moving averages, the 50-day, 100-day, and 200-day moving averages on the 1-minute candlestick chart can tell you a really good picture as well. But the way that I like to trade is off of, key levels and just like market sentiment, what's going on. And then if it's a day trade, it's like, what's going on with it? Is it news? Stocks don't just break out because of technical patterns. Like people think technicals support what the underlying thing is that is causing the stock to move. Stocks do not break out because of technicals. Never. You'll never see like AMC, like there was a perfect technical setup for a breakout, inverse head and shoulders, didn't happen. Stocks don't trade off of just technicals. That supports what is happening. Like if you have a key level at 420, that tends to be a support. That's a technical indicator. Same thing with the 50-day, 100-day, and 200-day moving averages. These are technical indicators. So we're not looking too hot. We're under this 200-day moving average. And, this 427 mark is the level that we have bottomed out at multiple times. Like intraday, we have hit 427 and stayed in that tight range for so long that I think it's significant. So I do have it marked, and and I marked this 2 days ago over here, and that's exactly what we've seen today. Bottomed out at what price is that? Yep, see, 427.16. So levels like that are important, but you got to know why you're trading. Like right now, it's all Fed, Jerome Powell. It's all fear. It's people hitting the sell button. If you're trading off the 1348 right now, it's just not something I like to do. Maybe it works for other people, but stocks don't trade off of just technicals. It supports the underlying narrative and what's going on. Like a news trade, if it's bad news, it doesn't matter how the technicals look before the bad news drops. The stock's going to drop, So I don't like to trade off of that kind of stuff. But different things. Everything's different, to be honest. But definitely the 50-day, 100-day, 200-day moving averages, and then just paying attention to key levels like 427 and 420. Like, shit, we were in this range for a while. We hit this multiple times. Well, it was resistance for a while here. Hit this multiple times over here. Sold off 420, right back up. And then, once we did hit this level, we really started to chill out again. Just back and forth around 427. And then back up. Same thing over here. And then we just launched from that and home sweet home after that. So, just different things. But the VWAP's good too. That's the volume weighted average price. And that's where a lot of hedge funds and big money managers will try to get in and get out of positions around VWAP. Dude, Tesla. Oh, yeah. Yeah, that. Yeah, see, Shane Miller, I didn't even see your comment, but yeah. VWAP and price action is where it's at, exactly, 100%. 100%. I mean, VWAP is so obvious. Like, you'll either get rejected at VWAP or you'll cross VWAP, and there's usually always a continuation to either which way if you break or go below VWAP. Yo, smash the like button, baby. You got an $11,000 commission check on Friday. Is that real estate? I'm a real estate agent too. Technically. I don't like to do it as much right now because I have a lot of other things going on and people just fucking tool me around. I had the worst deal of my life. I'm like, man. But I like buying my own houses because then I get the commission on the house too. To be honest. What would be the best worst case scenario for tomorrow, and what could come of both? Oh my God. The best case, depending who you talk to, if you're an ape, probably the best case scenario is the markets fall 5%. But that's really like markets worst case scenario in general, like 5% down. Best case scenario is like 5% up. This is very important. This is setting the tone for what's going to happen the rest of the year. If Fed Jerome Powell comes out and says, yeah, growth's kind of slowing down. We're not worried about inflation too much because growth is slowing down. We're going to hold off tapering. We're just going to hold off raising rates for the near-term future. Markets are going to have a 5% up day. Mark my words on that. That's very unlikely to happen. But that's a possibility considering growth is slowing down. That's not a fictional imaginary thing. But and then if he says, yeah, we finished our tapering. If he says finished tapering and the markets sell off on that, which they will, I don't think you're going to see a sell off, bounce straight back up like you usually do. So those are the key words, and that's going to also be like a 4 to 5% down day. If they finish tapering and if they're looking at a 0.5% rate hike, at the March meeting, oh yeah, that's pedal off, foot off the pedal. That's slamming on the brakes. Now, if he says, yeah, we're going to raise rates 0.5% or something crazy, which, I mean, tomorrow, just I don't even want to think about it, to be honest. Woo! Big Jerome in the house. Holds all the weight. Billy, trillions of dollars in his hands. Literally, the hands. Dude, Powell should be like, he's like technically the richest, non-richest person in the world. Because he's got like all the power to fucking start burning money or start printing money. Like he's... I don't even want to think about if he said they're going to immediately raise rates or something, which they have done that before. They have came out and said, we're, surprise rate cut back here. in March 2020. That was actually before the was it like the in here started cutting rates. But and then 2019, if I believe correctly, is when they came out with a surprise rate hike. Maybe it was 2018. One of these crashes was caused by that. And I think the market sold off 6% in that day. I remember it, but I don't remember if it was 2018 or 2019. It was big. It was really, really big. Jerome is the dealer, man. Yeah, he has got the whole markets in his hand. He's got the whole world's markets in their hands. If Powell's super hawkish, the whole world's going to sell off. He's going to be the most loved or hated person in the world. He's already in that situation, but it's going to be just crazy. I mean, we got some time in the morning, so I do expect it looks like it's going to be pretty green. I do expect a green open, but you've seen over the past couple days how fast it can change. So if you're making trades, just be quick with them. I mean, that's what I need to do more often, is just be quick with them. Just quick. But, I mean, that was historical what we seen the other day. Down almost 5% to close up 0.5%. That's only happened like 8 or 9 other times. And the median return after that, like this right here, the median return, the median 1 month return after we went from, over 3% negative to positive, they only happened in the years 2000 and 2008. And the average return after that was negative 5% on the broad markets. So it's a sign of a lot more pain to come. Same thing right here too. Like, dude, look at the fucking wicks on this candle. Woo! Woo, it's getting juicy. You don't see wicks like that, dude. Look. Come on. Quit playing. It don't even look like there's a candle there. When you zoom out, it's just a big wick. You just don't see that. There ain't even hardly a candle here. It's just fucking wick. That's wild. Yeah, SPY is ugly. Oh, your sell brackets. I seen that earlier. I forgot to reply. Sell brackets. I mean, me personally, 5 to 10,000. I'm kosher with that. I'm chill with that. I won't be greedy. I won't ask for $1 million. Human psychology would not let it go there anyways. I think we'd be happy with that. Biden's pulling the strings. Biden tweeted. Dude, check this out. Like, this is the first thing that got me thinking, like, he might actually raise rates tomorrow. Young Joe. He's a stupid son of a bitch. Couldn't believe he said that. Like, somebody obviously runs his Twitter for him. Oh, jeez. This dude be getting ice cream, be tweeting all the time. Oh, my God. He's tweeted a lot. Wasn't down here. Well, I don't really want to read all of these, but long story short, he said that he will get inflation down at all costs. Where did he say it though? Maybe it was not on this Twitter. I forgot where I seen it, but that's what he said. He'll get inflation down by any means necessary or something along those lines. And I'm like, shit. If you want to crush inflation, you have to crush the expectations now. Everybody hates Biden. Like people that even voted for him hate him. which, I mean, I try to stay just super neutral, like, because that's just me. I care about making money and helping people make money. Spreading financial education is my passion. You know, politics are just frustrating, and I can't change it, so I don't like to think about it as much. But yeah, he's pulling the strings. That's why as soon as he was renominated, this ain't even political. This isn't even political. Other people talk about this too. But when he was renominated, literally like the same speech he was renominated, same speech, same testimony, well, same thing. Fucking, what's it called? The fucking Senate hearing. The same thing. He said that he fucking rug pulled us. Forgot exactly what he said. Tapering. He said they're gonna have to double the pace of tapering like 2 months ago, and the market sold off because we didn't expect that. But that was right after Biden let him keep his job, when he was speaking to other people about potentially taking it. So, you know, when Biden says get inflation under control, Powell's probably wants to keep his job. So, you know, they will sacrifice the markets. And in their eyes, the markets are up. Look at that. They don't care if the markets come back down to here or even here. Well, they might start caring once we go like sub 400, like 380 maybe. Because you guys got to think about it too. When the markets crash, that affects the economy. You want to know why? You know, for a lot of reasons. Obviously, companies can't raise shares at higher prices and sell them to retail, sell them to people like us. But on top of that, IPOs are halted, like, for the most part. Not very many people like to IPO when the markets are going straight down. You know, venture capitalists, people that are doing these IPOs, tend to hold off. So that's people that are not making money, companies that can't raise capital. Because why the fuck would you IPO if your stock's going to sell off 30% the first day? No, thank you. There's no way to defend increased price, crime, market volatility. Oh, we're sort of almost at war with Ukraine. Yeah, it's pretty bad, to be honest. Just seeing it neutrally, it's definitely not good. Yeah, confirmation hearing. Couldn't fucking think of that. Someone says, well, all right. Futures looking good. It's the damn stock market Super Bowl tomorrow, ladies and gentlemen. Let's get ready. Wall Street says for 1K the price goes up. They need 1 trillion in liquidity. What's the calculation on that? I mean, that'd be pretty easy to figure out. Somewhere along those lines sounds reasonable. Maybe every couple $1,000. Thank you guys. Appreciate you guys for being here. Things look good. Dow's coming up. Nasdaq's coming down a little bit. It looks like it's going to be a solid start to the day. If you do have any calls, probably, not your financial advisor here, but getting out while the market is up is probably better than YOLOing it and waiting for young Powell, because the markets, in my eyes, have about a 75-80% chance of selling off, no matter what he says. Unless he's a super dove and says, hey, we're going to hold off, markets are going to sell off. Doesn't even matter. So that's all. Love you guys. Thank you for tuning in. Shout out to the mods. Shout out to everybody supporting the community in every way possible. Buying shares, being in the buy and sell alerts, getting your free stock down below in the description, or just blessing me with your presence and blessing all of us with your presence here on this live stream. So thank you guys. Shout out to all.